Did you guys happen to catch the live stream? I know Oscar did.
I caught the tail end.
Okay.
Yeah, I caught about I guess you had been on there about 12 minutes when I got on there.
Okay, cool.
A lot of good stuff.
Sounds good. Well, I'll just kind of sum it up and see if you guys have any questions. I'm still pretty much expecting the same thing as last week. As I've said, I was thinking that there's a good chance the Chinese would buy some farming goods and that Trump might give them a delay in the December tariffs and potentially continue allowing Huawei to operate. And so now we're seeing some farming goods being purchased. At the same time, we're continuing to see the rest of the world really break down. The PMI is crashing. And at the same time, this repo issue continues to create a strain on the overnight lending. So to me, this points to a much higher SPY as really the only place to invest right now with a safe bet. If we do look at what the rest of the central banks are doing, it's clearly lowering rates, easing monetary policy. So that makes me want to hold on to our GDX and our bonds as well. We've had a few hiccups after really looking into, let's see, we got Ernest. Hey, Ernest, how's it going? I think he's got his mic muted. I'll pull up that little chat box just so I can keep an eye on that. So yeah, Ernest was just kind of reviewing our outlook. Did you happen to see the live stream today?
Yes, I did. I just saw that here a few minutes ago.
Okay, good. So yeah, besides the SPY being above 300 this week, really our predictions are doing pretty well. We got out of USO. I was looking for some immediate escalation and oil shock, and we did not get that. So we got out of that in a week, took a little loss on that one. SPY, I was expecting to be breaking above 300 this week, but now we've had these various scares to a degree holding it back. But my outlook for the SPY is still bullish. I think TLT can travel higher just because all the central banks are easing monetary policy around the world, which I believe will force the US to follow suit. And this is also bullish for our precious metals. Now, kind of odd, yesterday we had gold up and Bitcoin down. It looks like there may have been a small bank or maybe a medium-sized bank that is having some serious financial issues and just selling everything in their books. And so that's why we potentially saw a weakness in a lot of the high PE companies yesterday. We saw crypto selling off. So that's what it seems like to me, is that there's some emerging market bank that is potentially having to dump all of its assets because of a big loss now. It's not super clear what the rhyme or reason was, but it's important for my job to try to distinguish a real risk in equities versus just noise. And so, and on top of that, the whole impeachment noise yesterday. So I don't think there will be any further progress on that impeachment. Congress's 2/3 vote. Trump gave the military, I think, more money than they've ever had. So I don't think they're going to be voting them out. The transcript came out. So I think that noise is out of our hair. The repo madness continues and was double subscribed last night. So that's a concern that's still on my radar. But it looks like China's ready to buy some agricultural products. So that could be the catalyst to get us much higher. We got about a 2-week wait before they negotiate again and potentially could actually put something on the table. So I think with the current outlook, money should just slowly but surely flow into US equities without any new scares. So yeah, that's really our outlook. Any questions that you guys have?
Jason, quick question. Is silver selling off for the same reason as the Bitcoin and everything else?
So yeah, the silver and the gold will have a bid when there's like a quick bid in terms of very quick jumps when there's a panic in the market. But the reason I'm long the silver and the gold is because of the central banks right now lowering interest rates and getting ready to do QE. So a little volatility is not a big deal for me in those assets. But no, we saw a crypto sell off yesterday when gold and silver were bidding. So that's kind of a little odd. Hey, Frederick, welcome to the webinar. If you have your audio, you can say hi.
Hi,
How's it going?
great, thank you. How about you?
Doing good, doing very good.
Glad to hear it.
Did you happen to catch the live stream video today?
Would you mind repeating that thing?
Did you happen to watch the 1 hour YouTube video this morning?
I missed that.
Okay, no worries. Definitely good to watch that daily for a lot of info, and then that way on our webinar, instead of me repeating the same info, we can do questions. So yeah, I think that the reason we want to be long silver and gold is because the central banks are lowering interest rates and getting ready to start up the next round of quantitative easing, and that's pretty much certain because of Germany's crashing PMI, now down below 40%. So they're going to have to probably aggressively print and lower rates, and they're already at the zero, below zero on their 30-year bond. So I think we're gonna see some volatility in the gold and silver, but in the long run, I don't see any reason to exit that play or the crypto until the central banks have a hawkish tone. Either they're going to stop the QE and interest rate reductions, or actually get so confident that they're saying, all right, now we're going to reduce our balance sheet and raise interest rates. So I don't think we're anywhere near that moment. So a little volatility is not a concern for me in that part of the portfolio. And let's
What
take a
about the
look at
TLT? Did you cover that in the webinar?
TLT. We're long for sure. So same general thing. If the interest rates are going down around the world, then bond prices are going to go higher. Also, that TLT continues. So we had like 3 weeks where we played it to the downside, where I thought it had gotten way ahead of itself and was expecting a rally in stocks. And so that did play out. And so I think we're going to have, I'm not worried about the TLT crashing right now because of the problems around the globe. So they have to carefully watch the rates differential between the US rates and the rest of the world. So they're not going to start getting super hawkish when the rest of the world's getting very dovish. So the portfolio is performing very well. When one goes down, the others go up. But in general, I believe all of the assets in our portfolio are headed higher at this point in terms of TLT, SPY, GDX, and SLV. Now, they're not going to go all up at the same time. But I think in general, the outlook for this portfolio is very strong. And even if we did get the farm deal at this point, because of how bad of shape China, Germany, and Europe are, I'm still willing to hold on to our precious metals portion of the portfolio, even if we get some trade tension. So I'm sure we'll see some volatility in the gold and silver as we get more and more better news out of the trade deal, but that doesn't circumvent the global problem where they're having a massive slowdown, and they really have no choice. They're going to have to lower rates and aggressively start up QE to try to get some economic spur in their economies. So I look at 2017, where we had US stocks up and emerging market and everything else really down, is what I think's kind of in the books right now. Now, what would concern me is if the TLT did sell off rapidly. back towards the level. Let me pull up some charts here. So again, we got to distinguish noise from real problems. And so the only problem I really can't get my hands around is that, you know, who's having to borrow upwards of 75, you know, now it's $150 billion a day request. Now this is being recycled. This is not cumulative. But you know, who has such a problem that they need this money, and why won't the U.S. banks loan that money out? Another question is, why will the primary dealers, who by law, that, you know, that's why they're a primary dealer, they have to pick up these U.S. auctions. They could be flipping this into the market for an instant profit, but they're choosing not to. They're choosing to build up a huge supply of treasuries. So that's something that's confusing to me for sure. But yeah, let's look at. All right, so here's why we got to look at the big picture. If we look at, can you guys see this chart pretty good? Can you see the 2007 level?
Yes.
So we had stocks flying up, but the Fed knew there was a problem. They were already dropping rates well before the stock crash. And dropping the rates into the stock crash really wasn't enough. So they kept dropping the rates throughout this period. Wasn't enough. And then I think it was in October, I'll have to pull it up. They announced that they're going to start increasing the balance sheet of the Fed. And that's when stocks turn around, and that's when silver stopped its crash. So just the lowering of interest rates wasn't the key for turning this around. They actually had to come in and start adding a lot of money into the markets. So they put trillions of dollars over the next 2 years into the markets. And you can see what happened to silver during that period. So the reason I like silver, even if we have volatility, even if we have potentially a trade truce, is that the ECB looks like they're about to roll out some serious quantitative easing. And also, Goldman Sachs, Bank of America, it looks like the US is going to start up purchasing treasuries in November. So that's not too far out, and I believe that's why we're seeing a pretty strong bid in silver. Also, there's a correlation to silver and gold, obviously, where gold has gone up much quicker than silver. So I think silver has some catch up to do. So that's what we have in the Tuesday play right now. With the SPY, we have all the great American companies in one basket. So I definitely like our setup right now. And you can see if we have to print anywhere near as much money as we did in the 2008 through 2010 period, it has substantial rally ahead of itself. Go ahead, Oscar.
Jason, so you anticipate being in this silver trade for a while?
Yes, I'd like to play silver for a long time, for sure. As long as the central banks are lowering rates and increasing their balance sheets, basically just picking up bonds, I think that'll be very bullish for gold and silver. So what would change my outlook? Well, if those global PMIs, which are crashing right now, were to rebound, and there is some evidence that they may rebound in the next few months. If we were to see the central banks are ready to pause the rate reductions, maybe even start seeing some banks raise rates, then I would not want to be long silver. But yeah, you can see it was a 3-year, 2.5-year rally to the top on that. Now the problems that we had in 2008 in terms of bad investment are magnified much more dramatically now than they were 10 years ago. So to support the problems we've created now in terms of the debt levels, it could be a dramatically larger balance sheet increase, or just the global money supply could dramatically increase in the next few years. So trade war would certainly help push this in the right manner. But it just seems like China is in so much trouble and causing so much trouble to its surrounding business partners, which we can see in Germany very clearly, that even with the trade deal, I don't think the central banks are going to change their outlook. So I'm willing to hang into a little volatility on the gold and the silver as long as the central banks have this plan. And now our central bank likes to tell us that they think everything's fine until the day of the meeting, and then they're like, oh, we're going to drop rates and throw out the words organic. Here's the key word from last Wednesday. Powell said, we're ready to resume the organic growth of the balance sheet. So the natural growth of buying up U.S. treasuries, basically. So when they start doing that, I think it's going to be extremely bullish for gold and U.S. equities if we're in a period of peace with China on the stock side. And I really don't see anything stopping silver or gold right now, unless we see Germany's PMI really pick back up and we see China's really able to resolve this credit bubble they've created. But you got to realize China has gone around building useless cities to keep its people busy and borrowing obscene amounts of money to finance it. And so that's how they've managed to keep their GDP from completely crashing, probably to a negative rate. And so that has crashed from something like 14% annual growth to, as far as they report, 6%. But that rate of change is huge. And the only way they can really get out of this problem is going to either work down their debt levels and have a period of low growth, or to continue the debt expansion and continue building all these crazy projects like their Belt and Road Initiative. So they went and built 50 cities that are the size of New York City that no one lives in to keep all these people busy over the last decade. They've poured more cement in the last 10 years than America has in the last century, just to have a feel for. And now their plan is to keep doing that, but instead of in China, for building their Belt and Road Initiative. So China has really misallocated capital, and I think they're going to take the whole world down at some point. It's just a question of when. And so will Trump take a farm deal, push the tariffs a little down the road? I think he might. And so I think we're going to have a period of peace at the same time that the central banks are all, because central banks are reacting to the past data. They're not trying to look forward. So the stock market's trying to look forward while the central banks are looking backward. And so I think central banks are stuck. They got to lower rates, print money. That'll be very bullish for silver, gold, treasury plays. But then we get the future outlook. Oscar says, should we invest in cement company? You should have a decade ago. But yeah, we'll see. You know, if China really did the full 2,500-page trade deal, then I think they'd be able to get tremendous access to capital and continue to expand their debt. But if they don't agree to it, it seems quite clear the U.S. has the power to cut off their access to capital. And I think if that happens, it will be, like Lehman Brothers times 1,000 in terms of the shock this could put in the world. So China's been the big growth factor for global growth for really the last 2 cycles. And they're running out of ways to, they're running out of bullshit to build, basically, and running out of credit at the same time that the U.S. is putting pressure on them. So yeah, that's really the thing to watch is, will this farm deal, agricultural purchase happen? Now they're talking about buying U.S. oil. So these are all very shiny objects for Trump in terms of his reelection and his base. So if he can get either of those or both, it seems to me he might be willing to delay the December 15th tariffs and let Huawei continue to operate, and then they'll continue the discussion. So I think that's our best potential catalyst for equities this year right now. And I think it's going to happen. We're already seeing China making some goodwill payments for food. And they need the food. I think their people are pissed because they have huge inflation on pork to the tune of like 50% year over year. And then on normal food, around 10%. Meanwhile, their CPI is up at 3%. So if all these banks are really trying to create 2% inflation, they're well above that. So they're running out of room to continue adding money to their economy without facing some serious inflation problems. So you can go look back to like World War I and World War II and look at the hyperinflation in Germany. And that would be the big fear for China at this point if they continue to just take this debt to higher and higher levels. Let's see, we got some more people in here. Let's see what we got. Hey, Paul, how's it going? Looks like you got your mic muted, but welcome if you want to say hi. I unmuted you. John, how's it going?
Jason, I have a question if you've got a minute.
Yes, sir.
How important is it, when you send out the trade alerts at noon Eastern time, how important is it that we execute or place those trades right away as opposed to an hour or two later?
Well, I'd say it's not that important. The only catch to that is if the underlying asset has dramatically moved in our favor or against our favor. But even if it moves $1 or $2, your credit or debit's going to change dramatically, but the outcome of the trade really won't change that much. So I would say it's still good that day and not a big deal. Now you can always jump into the live chat or shoot an email to support if it seems like the prices have, if the underlying assets dramatically change and you have any questions, you can shoot a email or a text message to me and ask if it's still a reasonable trade at that point. But yeah, no, these assets don't move that much typically. Now we are in a pretty crazy point in time where they have been moving pretty quickly. But let's take, for example, today's trade. I guess we're pretty close to where, let's see, when I issued that trade, let's see where it was trading at. Okay, so it's trading at 296.30 when I first issued it. And let's see, an hour and a half later, so you can see it's gone up 20 cents. Our maximum profit lost 20 cents. But guess what? Because you waited a little longer, you made that 20 cents on the SPY. So by and far, it's going to be fine for the rest of the day. Now, if that had gone up $1 or $2, it may not make sense to sell the exact same call. So yeah, if you've seen in my screenshot that the SPY is at 296.30 and I'm selling the 300 call, it's already gone up to almost 300, then maybe let's sell that 300 call. And on the other hand, if it's gone all the way down to 292, that put option is going to be way more expensive now, and the call option will be no value. So I'd say if you're plus or minus $1 in terms of the underlying asset from where I issued it, you're going to be just fine. Now, just realize the price you're going to pay is going to be a little different, but you either got a better deal or a worse deal on the new trade and made more or made less exiting the last. So you're still going to get just about the exact same results as I am in general. So yeah, I think you'll be fine. But if you do have any, I'll put my personal cell phone out here too, so you guys can save that. If you want to save that in your phone, you can always text message me if you ever have any questions too. Do you guys see that in the live chat? Here, I'll put it on the screen too, so we have it. Now, here's an interesting trade. Who out there has traded futures before?
Has or hasn't?
Has.
Yeah, I trade futures quite a bit.
Oh, okay. Well, so here's if the trade deal breaks down and we get a Trump tweet where he says he's going to raise the tariffs more aggressively than he has, and even with the tariffs coming ahead, I'm predicting these guys are going to devalue their currency. So we had been trying to profit from a collapse in China with their FXI, but it looks like not only are the Chinese going to just print more money to try to support their stocks, they desperately need to keep their stock market open so they can get capital in. And so I think if they're stuck in a decision of letting their stock market crash or letting their currency devalue, well, you can just look at the chart, and they're clearly willing to allow their currency to devalue. So if and when we get a breakdown in the trade talks and an escalation in the tariffs, I'd like to start selling the CNH. So we're just going to be selling at today's price, 7.1 against the dollar, and then in the future buying it for a discount. So if this were to devalue to say 7.4, that'd be about a 4% change of price. So each future contract represents $100,000. So could potentially pick up about $4,000 profit per contract if they were to devalue this from 7.1 to 7.4. Now, again, I'm waiting for the catalyst for them to actually, for the grumpy Trump tweet that says tariffs are going on in December or they're going to be even more escalated. And so we would just do the next month. So that's a trade would love to do, just waiting for the right catalyst to jump in it. Most likely I'll recommend only one future contract per $100,000 in the portfolio, as target return will be about 4%. And it's going to be if we do look at their history, they pretty rapidly devalue it. If you look at the 2019, at least specifically, once they realize what the tariffs are, they calculate how to offset that, and then they immediately let it devalue to that level. So it'll be a pretty quick in and out on that trade. So that's something I think will be a good trade opportunity for us too. Now, not right now, because it looks like they want a period of peace. They have the 70th year anniversary coming up. They're actually not just talking about buying goods, they're actually buying goods. So everything's really lining up for that SPY trade right now. And but meanwhile, I'm not scared of the TLT, gold or silver, because of the stock market's trying to predict the future and prepare for what outcomes may come, whereas the central banks are really reacting to old data, and they're stuck in this world of lowering rates and increasing the monetary supply. So yeah, I like our allocation right now quite a bit. I know was expecting SPY to be above 300 this week, but we've had quite a few little news scares that have hit the markets, but I think that'll be resolved. And so yeah, any questions out there, guys?
Yeah, when you send out your trade recommendations, if it were you, would you be placing market orders, or would you be using limit orders and trying to work the best price possible
On the SPY and the TLT, I would do market orders. SLV is a lot less liquid, so you could probably do a limit order on that one. But yeah, I mean, these products are pretty liquid, so I don't think you're going to save too much trying to mess around with that. So I think market orders are fine if you want to keep life simple, especially for the SPY, TLT, and even on GDX. Maybe on the Tuesday trade, if it's a little more exotic like SLV, it might be worth a limit order. And in terms of the options, those are pretty liquid on the SPY and the TLT also. So I would just do market order on those two.
Okay, thanks.
And yeah, so what happened to your Apple Play, Ernest? I guess, are you still hanging on to that? We didn't get that bounce we were hoping for yet.
I'm still hanging on to it. First couple of days, it lost big, and it has since slowly worked its way back up. I think I'm close to break even right now.
Yeah, well, the worst case on that one was you're going to end up with a lot of 100 shares of Apple, which I think is a great, position. So, so as a position where, worst case, just let them assign you and you own 100 shares of Apple. But yeah, that trade may be worth repeating next Thursday. So, or let's see, your expiration's on Friday, huh?
Yeah.
All right. Well, on Friday, I'll make sure to put out how to repeat it and pick some new strikes because my outlook's still the same. I still think stocks are going to break into new highs. And so I'll put out the alert of how to exit and roll that over. Who knows? Maybe we'll have it in the profit by Friday, though.
I'd love to have that.
But yeah, your worst case on that trade was you paid about $60 credit or debit, and then you get to own 100 shares of Apple. So a relatively risk-free way to put that trade on, as long as the stock market remains steady here, which it is. All right, guys, any other questions here?
Yeah, Jason, Fred, just one quick review of this SPY 300 296. Would you get into it now?
Sure. Okay, so here's the current trade alert. So we're expecting, or I'm expecting, a upward move in the SPY. So at this prediction, we don't want to cut ourselves short by selling a call option that's too close to the trading price. And so this allows us to pick up much bigger gains than we can just selling call options. Now, once we get to what I call the danger zone, which will be a pretty elevated value of the SPY, we'll tighten this collar up. So this will cut off our profits at 300, which is where there's a ton of option selling, which may create a pretty difficult resistance level for the SPY to get beyond. So that's why we chose that strike. And then the put option, I really picked the put option. I will look at the open interest, which I'll pull up. So when the market's really scared, oops, I picked the wrong one. Okay, so if we see open interest in the 50,000 to 100,000 range, that seems to be a pretty good warning signal that a pullback is likely. So at this point, the open interest in the puts is pretty low, and it's hovering at a pretty high price. So if we saw a huge open interest at a much lower strike, that would be very alarming to me. In this situation, our biggest open interest is just $1 below. So there's a lot of buying right below the current price. Market's clearly betting up. You can see the volumes pouring into call options. And then you can see the biggest open interest at that 300 level. So to me, this is telling me that we have a lot of buyers, the underwriters on the puts at 295, and we've got a lot of sellers at this 300 level. Okay, so from that point of view, options market's telling me we're headed higher. But from a risk analysis, in terms of trying to create a smart strategy where I pick the strike of the put, I'm more concerned about my risk to reward ratio. So I want my risk to not be too much greater than my profit. So even though I don't think we're going to have a pullback, you know, I could have gone maybe even all the way to here. But now I'd be risking, I could finance that put for free. But now I've added an extra $200 of risk. But look, if I'm willing to just pay a measly, so look, it was at 15 cents for that put right here. If I'm willing to pay just a measly extra 15 cents, I cut off $200 of risk. So call option strike was chosen based on where there's a lot of people selling calls, which may put a ceiling in the run up on the SPY. On the other side, because there's very little open interest in the put option market, I've simply chosen a cheap put option, but not one that's so low that it exposes us to too much risk. So usually I like to try to get it closer to 1-to-1, but you can see we have an extra $100 of risk, $150 of risk relative to potential profit in this trade. Now, this is the outlook where we think we have a massive rally ahead, which is what I think we have. And that's how we've been able to have some very nice profits on the SPY, despite this crazy year with volatility every other day. If I thought that we were going to trade flat, we might do something more like this. So we could do something like this where, well, let's see, we don't need to be that greedy with the put. Let's go back to 292. So if we thought we're trading flat, this is a nice setup. You can see we can generate a break even if it goes lower. And if it goes higher, we still make it $1.25. So that's not a bad setup. But it is about 1/3 the profit of our current trade setup. And even if this were to go flat because of the premium we're pulling off of it, we'd still pull 84 bucks. So that's not a bad trade setup at all. But right now, I really think we have there's nowhere else to invest your money around the world. You know, negative yielding bond, that's a guaranteed loss. Someone at the end of the day has to lose money on that bond once it goes through its duration. So people are just gambling on that. And I think with a pause in the trade escalation, we're going to see a lot of the riskiest bonds flee for the exit and then flow into US equity. So being patient with this trade in terms of trying to catch us some pretty nice profits. So yeah, look, we can pick up with this trade 326 a share just to get back to that resistance level. Now, might have jumped the gun on thinking we get above that 300 level. So we might potentially play a few of these tighter callers when we get to that 300 level. And again, if we thought we were going bearish, we had a question from, I think it was you, right, Oscar? He said, well, what if we think it's going to go lower? What would we do? So let's look at that. That's too tight. So this is our bread and butter safe way to short the market while owning the SPY. And this can actually have what I call a double payday. We could potentially get assigned on one day where the market jumps higher the day of the trade, and then it crashes the next day. And so we would be in cash. We would have kept the 250 from that in the money call minus the spread. So this is at 296.64. We're selling it for 295. So we're losing $1.60, but we're picking up 250. So we could pull in like 90-cent profit if it were to spike higher the next day, go to cash because of the assignment, but we'd still be long that put. So then if it did pull back below 298 and get back towards a little lower than where we entered the trade. So betting down has some pretty nice potential returns if we get to that point. That's how we would switch it. So just so you guys know, there's basically going to be three terms I use for these callers that, as far as I know, I'm the one who made it up. So I'm calling this the upside down caller. It's the in the money call and the in the money put. And again, if we're wrong and the market flies higher and stays elevated, we can only lose $1. Now, if you try to buy a put option or buy call options on the VIX or something of that nature and you're wrong, you're going to lose 50 to 100% of whatever capital you put into that trade. You do it this way, you have very limited risk and you're not going to get rich from it, but you can make those consistent income style trades. If we think the market's going to be flattish, we can go to something like this, which people love this trade. Can be highly profitable. Depending on how much of our credit we want to give up, we can pull this up a little bit. This is a setup where we can actually make money if it goes flat, up, or down, but we're going to give up most of the upside potential with this setup. So that's a tight collar. And our current setup is what I call a loose collar. So depending on the outlook, we can adjust those options to take advantage of it. Does that make sense? Ron? Any other questions out there today, guys?
Jason, got a question. If I wasn't going to be around a particular day, let's say I'm taking Monday and going out of the country or whatever, and I play that Friday rollover, is it smart to roll it over to the following Wednesday or just be in the SPY by itself?
Yeah, so that's a great question. Here's what I would do. If you're only going to be gone for like a day or two, you might miss like one trade. Let's just do a real life example. Let's say you're not going to be here Friday. Well, this prediction is my general outlook. I think the SPY is headed higher. So it's not going to make an awful lot of difference if you simply put your expiration here. You're still going to have that same setup, same profit loss, same risk profile. You're just going to give yourself a little more time. The trades, you can definitely extend an extra expiration and get a very similar result. Now, you may want to just look if I have changed my outlook. But you can see, your maximum loss in this is 1%, or I guess 1.5 in that one. So if you're only going to miss like one trading period, I wouldn't just cash out everything and quit until you're back, because you could just push it one expiration and that's perfectly fine. Now you're going to be out for a week or 2 weeks during a period that's as risky as we're at right now. You might be better off just going to cash. And just a heads up, there I do intend during certain periods of the year to actually do what we just described. Let me pull up a calendar here. Well, I'll tell you what it's going to be. The week of the 23rd through the 4th of December and January. So it's the week of Christmas and the week of the New Year's. I'll most likely be still providing a daily update, but we're going to make the expiration last over that holiday so that we're not having to trade during holiday periods. So expect every year. I know a lot of you guys have lifetime relationship with our program. We want to give you and myself a little break here and there. So there will be certain periods where I'll do exactly that. Instead of giving you a 48-hour trade, I'll give you a 2-week trade. And so we'll reconfigure all of the trades to basically last for like a period of 2 weeks. So certainly on the Christmas period and New Year's period, we're going to do that this year, coming up in a few months. And then most likely for around 2 weeks in July, probably from the 1st through the 10th, we'll do something very similar. So instead of giving you a weekly expiration on the TLT and the 48-hour expiration on the SPY, we'll give ourselves a little bit of a relaxation. Now we're still going to follow the markets, give you a daily update. There just won't be any trading activity. So we'll still try to capture a nice return. And sometimes you can actually make a better return by being patient and having a little extra time on your side. But that way you guys can count on at least 2 decent breaks a year where, you know, we're going to extend those expirations.
Thank you.
Yep.
Hey, I have a question. There was a time here a week or two ago where with the TLT trade, during the week, we basically maxed out our profit. And, but then by the time Thursday came around, we'd given back a good portion of that. So I'm thinking, you know, if we maxed out our profit, maybe we ought to be getting out of it early. What do you think?
Yeah, I think you could definitely outperform the service with a little knowledge for sure. There's certainly times where that can be in your favor for sure, especially like Kirk Wells had texted us on, when was it, Monday, I think, a few weeks ago, and he was up tremendously on that TLT put option. And he asked, was it a smart idea to get out now? And I said it would be fine to do that. So definitely, if you want to text me ideas about trying to manipulate the trade intra-week, that's definitely, in some instances, a good idea if you're pretty sophisticated. But from my point of view, in terms of making this a product that is attractive and passive, I'm not inclined to try to manipulate the trades outside of the trading periods, because this goes suddenly from a very passive, predictable product that you can count on and not have to worry about to everything else out there where, you know, you're at the whim of the guru flinging out trade alerts when you're not ready. So from my point of view, I won't be issuing official trade alerts outside of the trading periods, because it would ruin the integrity of what this product's supposed to provide for investors. But I'm happy to respond directly to you guys via my personal cell phone if you ever want to try to manipulate the trade to your favor. So certainly we give up some opportunities by being a passive product. So I wouldn't argue against you on that one, Ernest. And definitely add my cell phone to your phone book. I will have that's my personal. I'm gonna have a extra phone just for business that we just picked up two. Has everybody been getting the text alerts now?
Yeah, I'm getting them
Yes.
finally.
Oh, thank God.
I've missed
Not
it.
only am I a stock market expert, now I'm also a email text message filtering expert.
Yeah, I've missed it.
Stalkers make my life so difficult. So we bought two more phone lines, learned a lot about the filtering systems of these text messages, and it looks like we've solved that problem. So the old phone that we used to text message you guys, trade alerts, I'm going to bring over and have that as a dedicated line. And so for now, just add this phone. This is my private personal cell phone. If you ever have any questions, please text message me or call me. Murray, for example, calls me all the time just to talk shop, so I don't mind chatting. Jerry, you got a question?
Yeah, I've missed a couple emails for these live ones like this.
Oh, from Zoom?
Yeah.
Oh, man, but you got today's, huh?
Yeah.
Okay, so here's the way the email works. We use a company called iContact to deliver email. They're pretty good. We're looking at switching over to a platform that actually uses Gmail servers, which might be a little better. Zoom is the company for this platform. They're actually, even though it says it's from our email, they're the ones who mail out the Zoom. So if you don't see when do you guys usually see the invite hit? Like an hour before?
Well,
Okay. So yeah, if you don't see your invite, just text message the phone that's sending you the trade alerts is operated by Ryan. So if you reply to that and say, hey, I didn't get my Zoom link, he can get you a link out right away. He watches that all day. So that one, I'm glad you got it today. That one's hard for me to troubleshoot because we're not actually the mailer on that. But yeah, we got two brand new phones. We got one that's exclusive for customers now, and then one that's for everyone else. And I think that's going to help. It obviously is helping the delivery rate, so that's good. But yeah, we've had to make the text messages really short, really clean, control who we send it to, and it seems to work pretty well right now. So yeah, that was really a pain in the butt trying to get through these darn filtering systems. All right, guys, any last questions?
Thanks for your time, Jason. Appreciate it.
Hey, I really appreciate all the interaction and questions, and you guys got my cell if you ever want to chat or give me a ring.
You might regret that.
I found that you guys really respect my time, so I haven't been bugged by any client ever yet. So, in fact, we've only had one person cancel our service. This girl named Jagruti went and bought the SPY at all times high, ignored the option trades, and where we had predicted a down move, and calls me up and complains she lost money, wanted to quit. That was my only annoying client I have had to deal with.
Hopefully it'll be the last one.
Yeah, that's my
Don't
goal.
count on it though.
Keep everybody happy and try to weed out the losers here, and we'll all be doing good.
Take
All right,
care.
gentlemen. Well, I appreciate your time. If anybody wants to join me live tomorrow, it will be a mixed group, but you're welcome to hop on and chat. And yep, plan remains pretty much intact. Sorry about the USO not giving us a nice return, but boy, that really crashed today. So we got out of that. Perfect timing. And yep, looking good.
All right. Well, thanks, Jason.
Take
Thanks.
care, everyone.
Thank you.